The markets definitely took a big nosedive yesterday, and I want to talk about two things today. So we're going to talk about what happened in the markets yesterday and why was there such a dip, Nvidia stocks plunging more than 10% down and the rest of the market tumbling with it. And also the Fed meeting will be wrapping up tomorrow, Wednesday, January 29th. So let's talk about what happened yesterday first, and then we'll talk about the Fed meeting second. So yesterday, one of China's AI companies came out and said, we can create AI and actually simulate the capabilities of Chat-GPT. Chat-GPT, for those of you that are unfamiliar, is one of the largest AI companies in the United States. They spend millions, if not billions of dollars every year for developing AI technologies, artificial intelligence, which is what AI stands for, and all the money that they pour in. And this Chinese company sort of came out of nowhere and said, hey, we've only been in business for a year and we've only invested about $5 or $6 million. And our product is almost as good as ChatGPT, which is this multi-million-dollar company. And it sort of sent shockwaves throughout the technology community, and the markets reacted and said, wow, are a lot of these companies maybe overpriced or overvalued? Now, what the actual implications are is, I think, really two components. One is I definitely do think that the market has been overvalued as of late, and not just the technology sector, but the S&P 500 as a whole, the NASDAQ, the Dow, pretty much the entire U.S. stock market has been on this tremendous bull run. And we really are due for some pullbacks and due for some corrections to bring these valuations back into more normal levels. So I think that was really one component of it. And the second component of it too is it's saying, well, is it really making sense that if a Chinese company can make this product with a chip that doesn't generate as much power as a US based chip technology, then is there some maybe cornering of the market that these companies have? And the answer is a little bit complex of yes and no. US companies definitely pour a lot more money into this form of technology, and they have a much greater market share of the chips and processors available to generate AI technologies compared to other countries such as China, Taiwan, Japan, whatever. And with that in mind, part of it is, again, is yes and no. So some of these companies in the United States, they do have a large market share, but at the same time, there still is a ton of value behind them, and I think they will still continue to trend in the upward direction. I think really that when this Chinese company came out, it just created somewhat of an excuse for investors to look for an opportunity to sell, because investors want to, of course, right, they want to buy low and sell high. They never want to buy high and sell low. That will guarantee a loss. So they're always looking to try to lock in their gains. And with the technology sector being as high as it is, this was just really that tipping point for investors to say, okay, now is a good time for us to sell. We sort of see this disturbance and disruptance with other AI companies now on a global level, and it's a great opportunity for us to sort of sell out, take our gains, lock those in, and call it a day. And that's really exactly what happened. So is this going to be a permanent disruption in the AI industry and technology? I think the chances of that are very, very low, but it just shows that now there are competitors out there on an international level. And I think overall that will actually help the industry long term. It's good to have competition because it's going to force companies to continue to be innovative, to continue to put money back into research and development, and continue to grow their product line and continue to impress their customer base. So with that in mind, again, I think this little blip is going to be relatively short-lived. The market's actually up again today. So again, very, very short-lived. And I don't think really much of a cause to be concerned about. Now, on changing gears a little bit, let's talk about the Fed. So the Fed is going to be wrapping up their meeting as of tomorrow. They're meeting right over a course of 2 days right now, today, Tuesday, and tomorrow, Wednesday. And the market really is not pricing in any sort of rate cut. We've talked about this in great length already. If you've been watching some of the videos, the markets really do not expect a rate cut. I don't expect a rate cut. Everybody that I'm talking to is not expecting a rate cut. And really, I think where the markets are really looking for guidance from the Fed is actually going to be the conference sort of after the fact. So once they wrap up the meeting and say, okay, yes, we're going to make a change to a rate cuts, or no, we're not going to make any change to a rate cut, interest rate change at all. What's going to happen is the markets will look to Fed Chair Jerome Powell and really the comments that he says, because the comments that he makes are very indicative of what's likely to happen next and sort of where the Fed's mindset is over the next 3 to 6 months. During the last meeting, the Fed meeting, markets didn't really care that the Fed didn't do a rate cut. They cared more about the fact that Fed Chair Jerome Powell said it is unlikely we will be doing any rate cuts this year, maybe one or two. And that's where the market got kind of nervous and started to react very quickly and make a lot of changes in terms of just being volatile. The market's likely to do the same thing tomorrow when Powell comes out and he makes his comments. The market will try to interpret what he's saying, and then it will react accordingly. It's likely there's going to be some volatility just because, again, the Fed was very aggressive with rate cuts last year, and they sort of need to pull back because inflation pressures are still relatively high and inflation isn't going away as quickly as they hope. So again, the interest rate cuts are very, very unlikely, but Jerome Powell might give us some indication of what the Fed policy will be throughout the remainder of the year, and really looking toward over the next 3 to 6 months, which puts us right around to the beginning of summer. So what's likely to happen in the beginning of summer? And that's what the market is really going to be looking to him for, is that guidance right around May, June. What's going to happen during that time frame? Should we expect a rate cut? Should we not expect a rate cut? And that's really where I think the market will either have volatility in a good way and go up, or have volatility in a bad way and go down. So we'll keep an eye on what he says tomorrow. We'll talk a lot more about it next week. But again, we're sort of in a fragile state of the market right now, just with what happened yesterday and the Fed coming up with news tomorrow. So between those two, it'll definitely be an interesting week. So if you're a little bit nervous, I definitely recommend to not log into your accounts. Just don't look, wait until next week and then go back in and check. And hopefully by that time the dust is settled and you have nothing to worry about. So with that in mind, thank you so much for tuning in today. Talked a little bit about technology and AI and what's been going on in that world. Talked a little bit about the Fed. Next week, we'll continue the conversation after we know what's going on with Jerome Powell's mindset, and we'll just talk more and more about the continuation of markets throughout the year. So again, thank you so much for tuning in today, and I'll see everyone next week.